idea, you want to be in a trade, but you don't want to chase it, right? So I'm waiting for those dips on those places. I might have to wait till next week. So anyways, guys, in just a moment, we're going to hand the show over to Chris Pulver. You guys know him and love him. He shares in-depth market analysis on the show pretty much every day of the week. So we're going to have him join in just a second. He's not at his desk, but he will be in a second, and then we can pass the show over to him. In the meantime, we are about to, this is just your final call on the Edge Finder giveaway that we are doing this week in the free Telegram channel. If you didn't join already, join. We'll drop the link in the chat for a chance to win. Enter your name into the hat. We're going to be selecting a winner here shortly. So join the Telegram, click this link, just throw your name in. We're going to announce a winner today. Okay, up next, you got Chris Pulver taking over the show. Stay tuned, guys. We'll be right back.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, how we doing? Happy Friday. Welcome back. Give me one moment here. Okay, let me double check. Posted a new trade yesterday on Amazon. Gold's actually looking pretty good. The trade that I took on gold futures is up about 70% of my max profit already. Gold finally turned, which is not a surprise. I was expecting this to fall. We had about that 15% stretch away move. I think this is good for an opportunity to hopefully get a position on gold. Maybe, I mean, is this it, like this little tiny pullback, or is it going to be the start of something to come, like a, you know, is there a topping pattern in gold that comes back to a deeper level? I don't know. But as long as we stay less than 3250, then I'm looking good for my position here. And then any add-on trades, I'll be looking to add a little bit, you know, more GC exposure or more GLD exposure on a dip. Silver also having a bit of a pullback. Let's just go top down today. Interesting spots at the market. You know, we gapped lower. I look at this a couple different ways. Either we go out slightly bigger time frame here. So I'm looking at, I mean, we have a ton, we have like $4.5 trillion in option expirations today. And you'd think by watching 25, 30 minutes of price doing next to nothing today, it's like, would anybody even notice that? And the only real shining star of today is Tesla. In the entire heat map, we've got about 70% of stocks down this morning. And yeah, 72.4% of stocks declining today. And Tesla is fading. So we're at like 2 or 3% positive on Tesla. Now it's 1.24. We'll see. This is an interesting kind of look for the day. The markets really haven't done much outside of gap lower. Futures wise, you know, futures has clawed back a little bit. So, I mean, Nasdaq futures almost has taken away the decline from 8 o'clock this morning. If we end up taking out a recent high here, that would be a bit of a surprise, but I wouldn't be offended by that either. So I'll add a couple alerts, see if we get back to these recent highs. But talking about the high to low swing, we had a really strong level here around 5,600 on SPX. And I looked at today as like a coin flip day. You know, this could be seen as a low to high pullback, and the market is just using this as a flat pattern to find the right-hand side of the trend line into either, you know, next week's trading. If the market still maintains a little bit of a bid off these lows and we come back to that like 38 to 50% zone that I talked about, where the bulls and bears can really fight it out right around that 5,800 handle. That would be getting us through the end of the week, which is the 20th expiration, gets us through the quarter on the 31st, and then the market kind of gears up and gets ready for a potential, volatility event coming into early April with tariff talk. Okay. So, but when we open up this morning, is like, well, we're sitting right at this trend line. If we end up breaking the floor from Tuesday, the market may claw back down and try to find this gap, maybe even try to revisit the lows. So far, price isn't doing anything. I mean, it's just been relatively calm this morning, which is a bit of a surprise, but I'm okay with it. I just see these are my levels. So pretty sticky spot right around this 5,600 handle. If 5,600 can hold, then I, could see this market trying to come back and fill in some of this gap from yesterday. If 5,600 doesn't hold, then look left. I'm going to slightly higher time frame. If we don't hold 5,600, which would be the floor from Tuesday, so we've got this gap to close out from yesterday's close. We have this gap from Thursday, Friday last week. Okay. So what is the market going to do today? I don't know. I'd like to see the floor hold. I'd like to see it get back into this area here. I just don't see a lot of levels between 5,650 and 5,600. I mean, it's really easy for the market to just scream lower. It's really easy for the market to do nothing. And so I'm just kind of sitting on the sidelines and just going back to see, okay, what I do this week. Made a lot of trades, a lot of profits, more income trades that'll close out for full profit today. They don't have to touch and manage. I added some calls. I added some diagonals. I extended some of my trades out, but a lot of income trades for this week. So let me have a quick look here. This account I've got to watch pretty closely for. There's a couple positions here that I'm watching for a March 21st expiration. This one here. So this trade, if we hold above 560 today on the SPY, which we're trading at 560, like right on the nose today, I could just take a small winner. Let's see, 560 SPY. We're trading at 560 and change. It might just be worth it to take a small loss on this trade. Let me see what this is trading for right now. I'm going to take go 85-cent debit. All right, I'm just taking a small loss by about 35 cents in this trade to avoid. I've got a $900 risk on this trade, so I'm fine taking a $50 loss as opposed to a $900 loser. And it probably wouldn't be a full loss, but there's risk below the 560 handle for me. This one is just better managed to just take the small loss and not worry about it. I still have trades out to April, still have trades out to June. Any of the trades today, this one should be good. So this trade's up $60 right now. And this trade is down slightly. What? This one should be fine. If we stay above 465 today on the Qs, this one's going to be finishing out for $1.46. Oh, okay, never mind. That's not today's expiration. That's next week. Gotcha. Okay. So this trade's looking good. And this trade is okay if we show some resiliency going out to the 31st. So a couple more trades to monitor. Get rid of the SPY one. That's fine. SPY is good. SPX. March 31st is the nearest expiration. Couple of daily profit plays, watching those closely into April. XSP, some key levels. XSP for next week, Friday. If price is above on XSP, which is the mini SPX, if we're above 550 and above 550, then I'll be showing some profit traps on those, as well as hopefully the credit plus a profit trap. But key level. Okay. So a couple things to monitor for the day. I've got some chart alarms set on SPY and SPX. Let's continue to work through positions. Futures wise, we had a sell off at 8 a.m. and the market's just kind of clinging to these levels right now. That same floor from Tuesday is still kind of holding. Qs, again, gap lower, right back to the floor for Tuesday. More noise, more chop. Hopefully really, I hope the support will hold. It's, if the support doesn't hold, there's a bigger flush to retest the lows perhaps, but in this environment going into next week, end of quarter, we got through the Fed. Next week, Friday's PCE. I would say that the most pressing thing right now would be it's kind of quiet on the Donald Trump front, which is almost impossible to know. But if price can hold and be relatively firm today, then that support level looks pretty good for maybe a gap fill and a slight nudge higher next week. Dow, down. We just had mostly big gaps to the downside today. SPX, SPY's down 1%. Why? Mostly because of a gap. Price didn't really do anything, but we just gap lower. So gap lower on SPY. Equal weight down the same amount, another gap lower. Qs down 0.72, again, mostly gap. Dow down, mostly gap, like price hasn't done anything. Russell gap lower, down 1.2%. VIX, a little bit stickier here around that 20 handle. Could VIX go a little bit lower to settle into maybe the teens? Possibly. VIX 1 day fading a little bit. Dollar index, we talked about this. If anybody's looking to get long in the near term on the dollar, change the color here. If anybody's looking long on the dollar, it's just a near-term correction to me. We pull back into this area on the dollar and then looking for resuming short positions. But I do think in the let's say the next 1 or 2 weeks, if the dollar catches a bid, we might see the dollar index head up to 104.50, maybe even 105.50 zone. So if anybody's looking for scalps out there, oil. Still hanging out at these lows. I don't have anything on oil. I'm still holding on to UNG for natural gas. Gold, 2 trades. I'm running with credit spreads from down here, credit spreads from here, and then I put on a call condor position where I'm basically, if we get a push higher, there's a $500 profit trap here, as well as a $1.20 credit. So this trade over the next probably now 40 days, maybe less. It might be only 38 days left. Let me double check. 34 days left in the trade. So let me check this is out to April 24th. So let's go April 24 on GC. So right here. My 32.50 is now a 9 delta. There's a 91% chance this trade finishes out of the money, which is great. That's the initial trade. It's a $1.20 credit. If it gets into a profit trap here, currently the April 24th price is $3.39. So I've got a profit trap between the 30.80 and 30.85. That would be fresh highs on gold. If we have a retracement or a pullback on gold, then this trade just gets more profitable faster. So again, this 21 period is like the minimum. Okay, this 21 moving average in this previous high would be like the minimum that I see a pullback on gold. So if I'm looking at new positions on gold, I'd at least want to see a pullback to the. I see your comments, Bashy. What are you talking about? Gold? We're talking about gold? I'm just doing top-down analysis. But I'm looking for a minimum pullback towards the 21 moving average. I'd like to see it pull back a little bit deeper. The same reason I got short in the markets this year or hedged the markets is because of this move down to the 200 moving average. So, a deeper pullback, and I don't know what the turn would be on gold outside of maybe some heavy profit taking. We breached the 3,000 handle. It may have been something that everyone starts to see it, and then you see some retail traders start to jump in and chase this thing along. It could be a crowded trade to the upside. So I think a pullback is needed. We had that 15% stretch. We've got a 360 plus bar count. So I just remain pretty patient and pretty medium to long-term bullish. Okay. but I want to establish new positions. I just want to see where it's not at highs. I want to pull back. Silver, I'm still going to ride silver out a little bit to, if we come back to dynamic support, could be back into these moving averages. I might look at another silver futures trade, below this level. I think silver is also very well supported all the way back down here. So higher lows would be great. If we have higher highs, higher lows, higher highs, somewhere in here would be doable. But I want to make sure my stop area or my risk would be somewhere, in this area or lower. That could be a silver futures trade. Bitcoin still hanging out around 84, nothing too exciting. I did take some profit on IBIT with some puts this week. Let me make sure I don't have any of those remaining. So let me double check here on all accounts. BITO, that is a collar trade, and then IBIT is the one I'm watching for. I think I closed out most of these trades. Yep, these are all out to April now, April and May. Okay, so I closed out my March expirations. I had the 51, 50, 49, 48 all puts collected like $6. I closed it out for like a $4 debit, or just I made a couple bucks on the trade, but I didn't want to take the assignment, so I'm keeping the buying power and taking the small profit and then moving on. Okay, MicroStrategy still around $300. Coinbase, watching this one for next week as well. This is an expiration on Coinbase up to a 195 strike. So coin is here. This is an expiration for next Friday. If we're above 195, there's no assignment. If I'm below 195, I take assignment for 100 shares, and I'm going to try to do a quick repair. Possibly same thing with Tesla, either a quick repair or a collar trade. Just depends on which kind of premium set looks a little bit better. I think going into April, if the market's going to flush lower, I think the collar trade's the safer play. If I wanted to really lower the cost basis aggressively, then a covered call is going to get me a lot more premium. So I'll debate that over the weekend and kind of decide what I want to do on Monday. Copper pulling back a little bit. This is another one. We've got a pretty strong uptrend. And unless copper is going to absolutely put the brakes on at these all-time highs, I think a rally, pullback. If copper turns here for another higher low, we start going to all-time highs once again. Copper could be another one that looks pretty good. This trade that I put on for copper futures is up like 90+% of my max profit. I'm just going to let this one expire. So copper it's up 82% of max profit. So I'm just going to let it expire. These are April 24th. It's way, way, way out of the money. I think this one is probably safe for the income that I have. Japanese yen, nothing really happening there. Nikkei, not really doing much. Japanese yen, not really doing much. EWJ pulled back a little bit. DXJ pulled back a little bit. DAX, still choppy. Maybe a pullback into the 50 or 100 moving average. It's not the number of bars, but the percentage away. So a long percentage away from the 200. Maybe a bull flag. Maybe a bull flag for the aggressive DAX. But if we go, up and stretch away and we just have a little bit more of a pullback here, wait for a trend line break, look for some dynamic support. I think Europe and Asia still both look pretty attractive for the year. FTSE, same thing, looking for those deeper pullbacks between like the 100 and between the 100 and 200 moving averages. Look to see if the FTSE will, offer some support, turn green, stop loss below. If we come back to new highs. Again, it's a non-US play. Argentina, I'll wait for a deeper pullback. China, pulling back for the last couple of days. Brazil, I'd love to see Brazil. We talk about this at some point. If it's up above the 200 moving average, to me, that would be a pretty good indication of a buy zone. So I'm already long. I mean, I got long on Brazil back here when it was first in this zone. So I've just kind of waded through it, and now EWZ is in some profit. So if we get above this 200 moving average, this would be the first time in a while that we show a potential buy zone. So above the 200 is a good looking sign. There's plenty of room to the upside here. I'm looking at a target of around $40. ILF is Latin America. It's 40 plays. Mag 7. Another one that's just looking a lot like the index. You know, we had the flush. We're back down below the 200 moving average. This is where, you know, the near term, like the bulls in the near term, we can have a cover. We can have a little squeeze, right? The bulls can pull back into this area, but this is why I would say, because we broke the 200 and didn't immediately bounce back above it. This is where more of the, you know, the talking heads and macro out there is talking. Well, this is any type of bull market. This is a bull rally and a bear market. Now that now that we're strongly and firmly below the 200 moving average. I mean, maybe. If Mag 7 slides lower, index is going lower. If the index slides lower, is Mag 7 going with it? Probably. This is more of the de-risking, deleveraging. I don't think that the Fed put nor the Trump put is in at that 10 to 11% correction on the S&P. I think it's lower. I just don't know where. You know, it's like the scary thing is, could we go all the way down to like a 20% correction in the S&P? That would be, you'd have bear market conversations. But I do think it's still an incredible opportunity to just be ready to have some cash to deploy. It might be painful, it might be messy, but if you go back historically, and anytime you've been offered up a 20% discount, it's not very often. I mean, to my knowledge, you got a 20+% discount in 2022. You had a 20+% discount during COVID in 2020. You had a pullback in 2018, early 2019. That was over 20%. The last time would have been 2016, and then probably 2008 and 2000. Like, you're talking major corrections and crises and bear markets for a 20+% correction. Now, as we talked about this week, put in perspective, 20+% happens like every 4 years. 10% happens like every 1.5 years, every 2 years. So, I mean, we saw a correction in August for 10+%. We saw a correction this year for 10+%. And so that's what the market's kind of gripping with, or grasping right now, is it a correction, or is it about to get worse? And we don't know. So anyway, Mags is hanging out just below the 200 moving average. Is there a chance for Mags to play a little catch up, try to come back and retest this 200 moving average? Is that a spot to sell the Mags again, or is it going to close back above and actually give the market a chance to recover a little bit? To be determined. Okay. So we gapped lower, showing some green on Apple. We gapped lower, showing some green on Amazon. Broadcom still hanging out at the 200 moving average. Google, just slowly sliding, but I still like the income trades that I have on Google. My next ones are out here to May and December, which I wouldn't mind owning. If I took on some shares of Google, it would be, this has to be, okay. I did debit spreads. Okay. This is fine. So I did that can't be right. Is that right? Hang on. Let me check this real quick. Google. These are all puts. December 135 by 130. Was this old? That trade's done. Yeah, this trade was back in here. Okay, so this one's closed. I have the May ratio spread and then a December ratio spread, and then I've got a naked put. That's it. So I'll add in the December 19th 135 by 130. December 19th. So buy the 135, put, sell the 130 put, and that ratio spread is $2.80. So just a little income trade there. Meta, I'm not ready to take a nibble on Meta. Yeah, I saw that Nike had earnings. I took profit on my puts. I had a $65 and a $60 put, which I'm kind of glad that I did. They expired on, I think their expirations were today. Nike actually had positive earnings, but the stock gapped lower. Now, that being said, this trade I closed out for profit. I had a $1.72 credit, closed it out for a profit, mostly because I wasn't sure what earnings was going to do. But now that we're down to 67, we actually did see like positive earnings. I might see if I just do another like out of the money put. Let me see if I can collect some premium here. So I don't mind Nike. Fair market value. I think it's in the, it might be around current price. I mean, it gapped lower, so we're finding fair market at 64 bucks. So I guess what I want to look at here is if the IV is high enough, could I sell, a $55 to $50 put and, collect some decent premium? Let's take a look. Trade on Nike. If I went out to June, 90 days out, let my option chain fill in here. I mean, if I really didn't want to worry about it, then I could just sell premium out to December and say, I think Nike's like selling a 60 or 55. It's like, that's not collecting a bunch of income there. Collect $1.50, which is, it's okay. It's just outside the expected move. We're post earnings. So unless this thing really starts to tank, but I'd almost rather go out farther. So I collect $1.50 out to June. So keep an eye on that one. If I went out to December, similar premium, $5 strikes. I might be willing to do like 60, 55, and 50. Come on, option chain. Good Lord. If I did the 60, 55, and 50, I mean, that's a decent amount of credit for a stock that I'd say I'd be willing to own Nike. Ownership price, if I got to sign on any of this, 60 and 55 and 50 should be a $55 assignment price. So if I own it at 55, collect 786 divided by 3. I mean, I'd own shares of Nike at $52.38. So 52.30 would be, well below COVID lows. If Nike is, I mean, if we're falling, what would that discount be from all-time highs? Nike down to about $52. It'd be a 71% discount. And I'm not saying Nike can't go lower. I guess the big question mark is if we get a little bit more instead of frenemies, we become more enemies with China. Like, does Nike get hurt even worse? If trade war and tariffs, do they escalate? I mean, Nike could certainly, like, that is the risk. I'd say that is the risk, even though it's a household name. I don't know. It's just, it's not a bad trade, but I'm gonna take the trade. I mean, that's a good chunk of income. I know it's out to December, but if I pulled in, $750 to $800 on income, it's not bad. Probability is around 75%. Out of the monies, I mean, our assignment risk is maybe swap this for a slightly lower strike. So this one increases my probability now to about 81% chance of profit. So 55, 50, and 47, that would be a slightly different ownership price. So 55 and 50 and 47.50. 152 divided by 3, break even at 50.83. 50.83. So now I'd own shares at $49.12. Okay, so that's not bad. I'm going to take this trade. So if I can get over $5 for it, I'd be pretty happy. The bid price is $4.92. See if I can get over 5. Let's try to get some premium. Let's start at 5.10. So put this one on here. 511 just got filled. 9732. And this account here. Take the trade. There. Okay, 510 filled. Okay, so 1, 2, 3, 4 accounts. 1, 2, 3, 4. Okay, got it filled. All right, so that's getting added in here to Nike, and I'm willing to own. So Nike, a 12/19 expiration, and I'm doing a sell the 55 put, sell the 50 put, and sell the 47.50 put. Total collected was 510. Willing to own shares if assigned. That would be a break even at 49.12 if assigned on all 300 shares. Break even is 49.12. Okay, so I'll add that into Pulver alerts. So that will be, this trade's closed for profit. And I'm going to add in this trade here. So a December 19 expiration. Okay, so taking my credit out there. I'll put a line in the sand at 55. So go horizontal ray at 55. So that's where the risk is. That trade's closed for profit. And if we stay above it, cool. And some traders might be more excited, like to see that earnings were positive and we gap, lower, that maybe they just want to buy and see if they can fill the gap. That's fine. I'm just going to sell premium and not necessarily take on the risk. Not necessarily own the shares. If there is another slide lower and then we fill this gap, I might take a stab at a bull call spread, but I think right now just selling the premium and not worrying about it too badly would be fine by me. Okay. What else? Nvidia, sideways, Tesla. One of the few stocks that's green today. I will share a little bit of a story on Tesla next week because I will be looking to take some assignment today at the close at 255. My break even is going to be around 247. And I'm pretty sure that the safer trade is to take the assignment, cover, and buy a put. So I have a collar trade. If it goes lower, I can lower the cost base. If it goes up, it gets called away. But let me look at that right now. I don't have the assignment yet. This is going to be something that settles over the weekend, but I will be watching this pretty closely. So let me look at Tesla really quickly and just kind of get prepared for what a collar trade would offer. Earnings on Tesla's out to the 22nd. So what I probably look to do is go out to the 17th expiration and look at a collar trade. So if I own the shares around 247, I could look at a 250 to 255 and see if there's a little bit of recovery, make a few bucks on the call side. So if I have the 250 call or 255 call, as long as I can finance that, I don't have to go out super far. So maybe a let's see, 1060 credit. That's up 20 bucks to down 20 bucks. That gets financed for $1. Maybe go a little bit further out of the money, a 25 put. That's not awful. I could get the stock called away for be a 247 break even, minus $4, 243 break even, get it called away for 255. I still make $1,200 on the shares, and I still have protection to the downside. So, this would be, the goal is to get me. This collar trade would be to protect me through tariff season, whatever the heck that looks like, through early April. It actually might be better if I go out a little bit farther. So instead of going, I'll go through earnings. I kind of want I want the premium like pre-earnings in case it just goes up on its own. Like if this tariff conversation isn't as bad as what the market's already kind of priced in a little bit, then we could see a bounce up in Tesla, bounce up in Mag 7, bounce up in the indexes. I don't know. We'll find out. But earnings could be the next big catalyst. So if I can, make the money pre-earnings, that's fine. And then if I still have any shares, through earnings, then I'll extend it out by another probably 30 to 60 days. So all right, that'll be a discussion next week. Berkshire Hathaway, full profit coming on this one this week. TLT, diagonal spread. This one's out to April. I don't really have to do much on this outside of wait for the sell side to expire. So my 62 by 95, that is April 30th. So I still got a little time on that one. Fed funds rate. What do we have here? So we got the 2-year dropping. We got the 10-year sticky. Is that making is this deepening the inversion again? Nope. This is going the other way. So this is the 10 and the 2 going higher. The 10 and the 3-month continues to stay inverted slightly. China has been pulling back. I'm just going to be careful on China. This is my current position with JD. I still have shares of Alibaba and some ratio spreads and bull put spreads. Baidu, I still have some shares with a collar trade. SCHG, SCHD, SCHY, just some inexpensive kind of broader market plays. Stocks above the 50-day. Watching this as a timing indicator. Nasdaq stocks above the 50-day. Watching this as a timing indicator. I wonder if consumer discretionary and tech would be offering up the first bounce more so than the S&P. Maybe. Walmart, 86, bouncing off these levels. There is a trade. What is my current trade on Walmart? Walmart, I went up to August, 100 by 65. Yeah, I'm just going to, it's, hopefully not a super high beta stock. It usually is not. But I've got to put protected in case we go lower. If we break below the 200 moving average, I mean, this should be a correction that offers up maybe a decent rally. I just don't know if this is the high, low, lower high to lower low. And all of a sudden we're talking Walmart, fair market value, which is in like the 80s right now. I mean, I do think that there's room to run. Checks a lot of boxes, not a ton of risk as far as the overall stock. One of the biggest retailers in the world. Definitely trading a little bit higher price to earnings multiple, but fair value around $97, and I've got it covered at 100. So if I get it called away, fine. Current price is 85. I mean, this shows that there's some resiliency in Walmart around $86. Hopefully back up towards like 95 to 100 is fair. If it gets called away, I mean, the recent highs were 105. So anyway, that's Walmart. Nike just put the trade on. Home Depot, quite a bit below the 200 moving average. I would be kind of cautious on this one. I think we need an improvement in the housing market for Home Depot to get a bid. We need to see. I mean, these are big projects, right? If you're spending at Home Depot or spending at Lowe's, you're typically taking on housing projects. You're talking your average checkout is way more expensive than a typical transaction at Walmart or even Amazon. So I would like to see it. If they fall lower, there's a lot of support back here. This is Home Depot around like the 285 zone. Back here on Lowe's around the 185 zone. So if they become attractive, then sure, I'll take some stabs. AXP, I do have a ratio spread in this one. I'm going to keep a close eye on AXP. So right now, I do have some ratio spreads. I did an April-May ratio spread. So overall, upside down slightly on ratio spread there and ratio spread there. So monitoring 260 is my line in the sand. This might work out to be a bonus trap, but I just have to wait a little bit more time. So we'll see what happens. I don't mind this trade. If there's resiliency here, back above the 200 moving average or just hanging out around this 200 moving average, then this one looks okay. Johnson & Johnson, my healthcare play. PG just off PGR off the highs. CB, this is good for profit into May. Palantir still hasn't pulled back enough. On Palantir, I wouldn't be shocked to see this. High, low, lower high, lower low, find the 200 moving average. If the markets run away from growth and run away from momentum, then this stock is likely going to face some more resistance ahead. So it still looks good for some of my ratio spreads that I put on here for income. In the near term, I'm not buying Palantir right now, even though it was a pretty hefty discount. Did anybody take some Palantir there down about 40%, trying to play those lows a little bit? I did not. I'm just hanging out here with some expirations to make some income. Carvana, pretty decent pullback, down 45%. I'm not going to touch this stock. I was in the Carvana play here when it was head and shoulders. I was happy with that trade, and I did not chase this thing up to the ridiculous triple-digit gains that it had. Salesforce, O'Reilly, Redfin, Zillow. Yeah, that's about it. All right, let's get currencies going. What happened to gold? I don't know. Profit taking. Only the technicals that I've talked about for the last couple of weeks, which is be cautious on the upside because we're probably going to get a pullback. So what does the headline say for gold? Pauses record run as dollar rises. Gold dips on higher dollar. I mean, that's about the only thing I see the correlation is the dollar got a little bit stronger, catches a bid, and it pulls gold down. Gold is still a great instrument. Gold is still a bull market. I think this is one of the healthiest bull markets we have in the to choose from right now. And it's not necessarily for the greatest reasons. I mean, gold bull market is probably just because of the heightened global uncertainty. Let me check one quick trade here for today. SPY. Son of a biscuit. All right. Can we get a gap fill today? Come on, bulls. Show us something. All right. Just going to keep a close eye on that. When the volatility was high, I did sell a cash secured put on SPY, cash secured put on Qs. That's up 73.5%. That's not bad. On the Qs, sold some puts. Put. Sitting up around what is that? $550, $700 on these puts. So these are not that far away for, I would say, full profit. I'll just do a group here for naked put combo. And collected $9.88, and it's up $700. I mean, it's not a bad spot to be protecting. I can let it go all the way to profit, but I mean, they're quite a ways. They're way out of the money for this next, 30 to 90 days. Probability profit on each one of these is 97 to 98%, 99%. So that's just taking advantage of the, high IV rank that we saw with the kind of peak to trough when we got the IV ranks up into the 50s and 60s. I sold some premium. Those are way out of the money. I sold like a 10 delta put, 15 delta put. So just trying to make some bucks. All right, let's keep going. Let's get to currencies. Good entry for gold. I'm just going to wait. I mean, if you look, gold would be this. If you're taking little tiny stabs at it, a pullback here, small entry, a pullback here, small entry, a pullback here, small entry. I mean, if you're willing to kind of dollar cost average into gold, I think having a level somewhere around, I mean, that's a 3% correction. That's a 7% correction. That's about 11% correction. I mean, I think that's great, because I mean, gold running to all-time highs again and again and again and again with what seems to be a pretty healthy bull market. I like the trade. And my stop area, if I was going to take the stop, would be anything below the 200 moving average. I wouldn't want to see too much damage done to it, but I don't know how much longer we go before we hit it. So anyway, if I'm trading small enough, gold is fine. Like, just dollar cost average into but give me a pullback. That's what I'm saying. Like a pullback to a minimum, this previous resistance or this 21 moving average at the minimum. The last time we hit the 21 and the 50 combo, it was a pretty good combination of support. This hit the 21. It's just been an aggressive bull trend. So I'd like to see at least a pullback towards the 2150 moving average, and maybe call that position 1. We pull back towards like the 100 to 200 moving average, position 2. I'll wait for that. If it keeps going and going and going and going, okay, I'm not going to get the dip that I want. I'll wait. All right, let's get to currencies. Okay, currencies. Aussie CAD. I'm still bullish on Aussie CAD just because it's a slight positive swap. And to me, this is an easy range currency. You're buying the lows, you're buying the lows, you're buying the lows, and there is equal highs and equal highs to trade back to. So if I'm just leveling myself into Aussie CAD, I think there's equilibrium profits and there's range profits at resistance. So it's a slight positive swap. It's a reliable, efficient range currency, and that's mostly what I'm doing. Aussie Swiss, still stacked up positions here. I've got buy limits and buy stops above. Yen showing weaker Aussie. Let's go currency strength today. Japanese yen, weak to strong. Aussie, weak. Yeah, I mean, 25 and 40 is not a lot of volatility today. The Dow, which is down, but it's paused on the day. I mean, it's flat. You can US 30s thrown in with S&P. It's like we're down like 1% with a gap lower. That's pretty much it. Aussie New Zealand. I'm still looking for Aussie New Zealand to see if we will maintain a slight uptrend and a channel into these highs. So pullback. I may look at another bounce on Aussie New Zealand. It's just going to be a grind. Timeline horizon for what? Indexes? I'm looking all terms, like short, medium, long term. Right now, we're dealing with a lot of like short term is probably, maybe a short term recovery to a near to medium term. Like I think April might be like another leg lower initially, and then it kind of catches itself and moves higher. I think there's a decent seasonality to the market, for April, May, June. It really depends on like how severe these tariffs are coming out in April. Like the market doesn't know. I think a pullback towards like the slide of a high, low, markets down, X percent, right? Dow's down like what, 7-8% from the highs. So the US 30 down about 7-8%. If it pulls back to a 50% area, that's a good spot to be de-risking, deleveraging. And if we go another leg lower, I want to be ready for that. If we go higher, pleasant surprise. But I think the bulls and bears are going to sit and kind of force us to we'll kind of wait and see whether the market is capable of going higher. I'm a little skeptical on the higher. I think this market's going to struggle to get to all-time highs anytime soon. If it gets all-time highs soon, freaking great. I'd love to see all-time highs, but I'm not counting on it. Okay, Aussie dollar, I'm out of that trade. This one closed out for profit. I had 2 longs and I had 3 longs. Closed out 2 winners and took a small loss. Aussie CAD, still liking. CAD Swiss, leveled in. Buy limits, buy stops. CAD yen, don't care. Swiss yen, don't care. Euro Aussie, be careful on this stuff. This is a weird move. So if this is a swing, is this going to go back up and retest the highs and then fall? If we have some severe risk off trading, is this going to just continue to head higher? I don't know. This is really volatile. Be careful. Trade with confirmation. If this is a high, low, lower high, if it breaks this low, this is a cup and handle pattern. So if we break the low, there could be, I mean, nice thing about technicals on Forex is it's very efficient. So if we break this low, we probably have a pullback at least towards the 50% zone. So take this low to high. And if we break this low here, then we can go back into about that. That'd be a break of around 7,100, and we could go back to around 6,900. So there's some scalping opportunities in there with the break. If you want to look a little bit tighter, then you're looking to see if there's a rollover, get some confirmation stop loss above, and you can go after 6,900. So either this thing turns to break these lows, or we come up to a equal high, and you can sell nice and high for a range trade. But take the higher time frame structure, go down to a smaller time frame for some precision, and see if you can find something. EuroCAD, this one hasn't pulled back yet. This one could be a pretty good one as well. High, low. If it pulls back for a lower high, looking for another chunk. Take this low, take this high, find your equilibrium. Probably a good spot to look for some near-term profit. I don't mind that trade. Euro Swiss, same thing on the other Swiss crosses. I've got levels on both sides. But I'm just buying it. I'm buying Euro Swiss. Euro Pound, no trade. Euro Yen, no trade. Euro New Zealand, be careful. Like I said, Euro Aussie. Watch your equilibrium levels. If we pull back for a lower high or pull back for an equal high, shorter time frame confirmation, watching that. Euro dollar, little bit of a pullback on euro dollar. It's not a surprise. Dollar index is looking to rally. Euro dollar may be pulling back into these inefficiencies. So I could see euro dollars doing this, pulling back, pulling back, pulling back. Okay. So if anybody's short euro dollar right now, maybe at this equal high, I would put a stop loss into break even. I wouldn't be messing around with this trade. If it goes a little bit lower into these inefficiency candles, then trailing a stop. Not crazy complicated. But this is also pretty well supported. If this is a zone that gets picked up by the bulls, looking for something bullish to come out of here and see if this market wants to head back up to 1.12. A weaker dollar seems to be the plan of the Trump administration. The weaker dollar is also likely going to help bring down the yields in some capacity. Maybe the 10-year yield, maybe not. But that's at least part of this initial pain plan with cutting fiscal spending and taking away some of the punch bowl. Pound Aussie back up to highs, no trade. Pound CAD choppy, maybe a resistance level up here with this low to high. If we have an equal high resistance, smaller time frame could be a pretty good trade to find some equilibrium. Wouldn't be a bad trade if you're watching between higher time frames and lower time frames. Pound Swiss, I'm still hanging long on this one. Pound Yen, no trade. Pound New Zealand, be careful. Pound dollar, just to pull back into these candles here. So a little pullback into these candles. Again, if it stays bid, maybe another chance to watch a weaker dollar. There's a pocket up here. Is it possible that the pound dollar runs back to 3,400? Maybe. But I like pound dollar a lot less than euro dollar. I think euro dollar is a cleaner read right now than pound dollar. New Zealand CAD, same thing in Aussie CAD, just sticking with this range. I'm long. I like this trade back up to highs and highs. If it comes back to lows or lows or lows, I'm just going to buy more. Range trade. New Zealand Swiss leveled in. New Zealand Yen. I mean, it bounced off the lows like we talked about. I didn't take any trade on it. I don't like the negative swap, so no trade. New Zealand dollar closed out for a 30 pip loss, and then these two combined, the total pips was 290 pips between the three trades. That trade's done. Dollar CAD, who cares? I don't know what's next. Maybe this structure here, high, low, little indecision. Does it break? I don't know. Maybe if oil gets a bid, then sure, maybe the CAD gets stronger. I just don't see a lot of reason for the CAD to get too much stronger unless it's just all dollar driven. If you want to see dollar weakness, euro dollar is probably the best trade right now for dollar weakness. Dollar Swiss, no trade unless we come back into this area. I want to say 86, 85, 84. I'm just going to buy and try to trade the range. Dollar Yen, no trade. We'll see what this one does. If this is a topping pattern, then any type of swing pullbacks, looking for that trade. But I'm not going to trade the dollar yen. I'm going to trade FXY, and I'm going to trade 6J for that trade. So this is Japanese yen futures. This is an ETF that follows the Japanese yen. I don't want to trade Forex, not with the Japanese yen. Negative swap is a pain in the butt. I'd rather trade positive swap and get 3 to 4% on the currencies that I'm holding because of the interest rate differential. Plus, the Swiss Central Bank cut rates this week to 0.25%. So one potential outlier for 2025 before we go today is the Bank of Japan might still be looking to raise rates. Might. And if they do, they are going to be one of the only central banks that would be raising rates. So take a look at this chart, and this is like your G20s. So let's look at any of these major central banks. Okay. Japan is the only green arrow. Okay. Everything else is down, which means the entire world of central banking is cutting rates right now. Japan is not. Now, this conversation wasn't nearly as important as going from negative 1% or negative 0.1% to 0 to then plus 0.1 to plus 0.25 to now plus 5, plus 0.5. I mean, they have raised rates multiple times. And so even at, 0.5%, it's like, is the next step 0.75? Is it 0.75 to 1%? If they are on their way to 1%, and this is the only central bank that is doing this, here is your curve of positive interest rates to negative interest rates. The Bank of Japan was here for a decade, and then they got to 0, and then they got to positive, and then they're moving. So they're going this way. Japanese yen, Bank of Japan is going up. Most other central banks that raise rates are now coming down. So I do think that takes away a little bit of the attractiveness of this carry trade that has been so prevalent, popular the last couple of years. So I don't know if and when this happens later this year, if they raise rates again, if this starts to be this potential risk like we saw last summer, which was the Japanese yen deleveraging. So I'm just putting that on the radar this year. That could be a reason for the Forex market and maybe even the stock market to show some heavy amounts of volatility in 2025. Bank Japan is a wild card, always. I think Japanese yen is either traders are loving it so much because they've made tons and tons of money on it, or traders hate it absolutely because it doesn't make any sense technically. Like, it is more of a sentiment, irrational currency pair to me than it is a technical one, because when it moves forever, and it feels like it doesn't want to rebalance, and it does eventually. So I still believe in the technicals, but you wait sometimes 6, 9, 12 months for technicals to rebalance. And if you're caught on the wrong side of that move, you hate your life as a currency trader. So don't be on the wrong side of the yen crosses. Easiest way to avoid that is don't trade them. So the way I'm picking my battles is define risk with no negative swaps, and that's why I'm trading, FXY and 6J. So, all right, I'll wrap it up there. Happy Friday. Have a great weekend. See you soon. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.